Imagine this. You finally decide to take control of your money. You open your banking app, and you see just $100 sitting there. Now the question hits you. Can I really invest with just $100? Or is this too small to even matter? Most people laugh at this idea. They think investing is only for people with thousands of dollars. But here's the truth no one tells you. That first $100 is the most important investment you'll ever make. Not because of the money, but because of what it turns you into.
Let me tell you a story. A few years ago, there was a guy named Alex living in Melbourne. He wasn't rich, no finance degree, no big salary, just a normal 9-to-5 job and a dream to escape financial stress. Every month, he would tell himself, I'll start investing when I have more money. But more money never came. Until one day, he got tired of waiting. He looked at his account, $127. And instead of spending it on food delivery or random shopping, he invested $100. That one decision changed everything. Not instantly, not magically, but slowly. He started learning, making mistakes, understanding how money works. And within 3 years, he wasn't just someone who wanted to invest. He was an investor. And that's the real transformation. Before we talk about where to invest, you need to understand something powerful. Your first $100 is not about profit. It's about identity. Because the moment you invest, you stop being a consumer and you become an investor. And that shift, it changes how you think about money forever. Instead of asking, what can I buy? You start asking, where can I grow this?
Let's start with the easiest and smartest option for beginners: micro-investing apps. If you're in Australia, these platforms are designed exactly for people like you, people who want to start small. Here's how they work. You deposit your money, and the app automatically invests it into a diversified portfolio. That means your $100 isn't going into one company. It's spread across multiple investments. Think of it like this. Instead of putting all your eggs in one basket, you're putting them in multiple baskets. Why this is perfect for beginners. You don't need stock market knowledge. You reduce risk through diversification. You can start with very small amounts. It's simple. It's beginner-friendly. And most importantly, it helps you start.
Now, let's level up. If you want to invest like smart investors, you need to understand ETFs. ETF stands for Exchange Traded Fund, but don't let the name scare you. Here's the simple explanation. An ETF is a collection of companies packed into one investment. Instead of choosing one company, you invest in many at once. For example, top Australian companies, global brands, tech giants, all in one place. Why ETFs are powerful? 1. Low risk, compared to single stocks. If one company performs badly, others can balance it. 2. Long-term growth. Markets grow over time, and ETFs follow that growth. 3. Passive investing. You don't need to constantly buy and sell. With $100, you might not buy multiple ETFs, but you can definitely start with one. And that's enough. Now imagine this. You want to invest in big companies, but their stock prices are too high. Maybe one share costs $500 or more. Does that mean you can't invest? No. This is where fractional shares come in. Fractional shares allow you to buy a portion of a stock. So instead of buying one full share, you can buy $20 worth of it. This means even with $100, you can invest in multiple companies. Why this is powerful? You get access to top companies. You don't need huge capital.
You learn real investing. But here's a warning. Don't just invest in popular names blindly. Always understand what you're investing in.
Let's be honest, not everyone is comfortable with risk, and that's completely okay. If you're someone who feels nervous, start with a high-interest savings account. Now, this won't give you massive returns, but it will keep your money safe, give you small interest, build your confidence. Think of it as your starting point. There's no shame in starting safe. Now, this part is very important because this is where most beginners lose money. Avoid these mistakes. Don't invest based on hype. Don't follow random social media tips. Don't expect quick profits. Don't put all your money into one risky asset. And especially, don't treat investing like gambling. Because if you chase quick money, you'll lose your real money. Let me give you a simple, practical plan. Something you can actually follow. Step 1. Start with $100 in a diversified option, like ETFs or micro-investing. Step 2. Invest small amounts regularly. Step 3. Stay consistent for months, not days. Step 4. Learn as you go. That's it. No complicated formulas, no stress, just consistency. Here's something most people underestimate. Consistency beats amount. It's not about investing $10,000 once. It's about investing regularly over time. Even $20 per week can grow into something powerful over years. Because investing is not a sprint. It's a marathon. Let me ask you something. 5 years from now, which regret will hurt more? Losing $20 while learning to invest? Or never starting at all? Because time is the biggest factor in investing. And the earlier you start, the more powerful your money becomes. So don't wait for the perfect time. Don't wait for more money. Start with what you have, even if it's just $100. Because that's how every investor begins. If this video helped you, hit like, subscribe, and comment "started." And remember, your journey doesn't begin when you have more money. It begins when you decide to start.